Boris Pikhalov, Chief Analyst and Head of Client Delivery at Stobox. Neil Martin, Chief Executive Officer at InProp Invest.
Spain grew by 11.2%.
Less than 1,000 euros per square meter.
Property prices in Murcia are typically 60% less than the average for the whole of Spain.
Market locally is great.
But Murcia grew by 16.3%. Tokenization will be an absolute game changer.
Dear viewers, welcome to Stobox Interviews, where we speak with industry leaders and rockstars about future of tokenization and financial industry. Today I have a pleasure and privilege of speaking with Neil Yoon, who is a Stobox client doing an exciting tokenization project. Neil, it's a pleasure to have you with us today.
Good morning.
And let's get straight into the conversation. Neil, please tell us about yourself and your business background.
My background, I've been 25 years in the UK in finance, worked for a bank for many years before getting into working with high net worth clients, dealing with taxation, trust work. That led me into property, and I've spent 7 years in Spain dealing with property, running a business in property. So my background is very much around finance, property, real world assets.
Okay, thank you for giving us an overview. And could you please illuminate how did you arrive at the idea of tokenization based on your background? And why did you see the potential and decide to pursue it?
Okay, so from my background, I've spent a lot of time talking about asset classes and diversification of portfolios, and all financial institutions use property, commercial real estate, as being one of their mainstays in the fact of it is stable, it generates a long-term income, and it's a balancing act to any portfolio. So when I came to Spain to deal with property, I wanted to deal with commercial real estate, and which was very complicated and very difficult because of the Spanish legal system, the banking system. Anyway, I've looked at crowdfunding, I've looked at shared ownership. So I looked at many different ways of trying to promote commercial real estate with huge difficulties. Okay. Tokenization was a revelation for me in fact of it then allowed commercial real estate in Spain to work and be able to be and allowing us to offer this to everybody at whatever level, from $100 up to $1 million, whatever they wanted.
I'm wondering, in your previous deals, what has been a more typical minimum investment that you have dealt with? Probably something like $100,000 in that range.
We maybe dealt with properties between 100,000 and 2 million euros. But the bulk of those have been to individual purchases for property. The commercial real estate is something I've really worked on for quite a long time, and until the tokenization proposition, without success. Part of the reason for that is if we look at shared ownership, okay, and the simple way I talk about shared ownership is think about buying a share. If you want to buy a share of Tesla, you don't own Tesla, you just buy a share of the company. And the same goes with property, okay? How do you buy a share of a property and have all the beneficial rights without the problems of being a declared owner? And that was the problem in Spain. If I buy a share or a share of a property, I need, or every client who does that with us, we needed them to come to Spain or to go to a consulate and sit in front of a notary to deal with a land transaction, which basically doesn't work when someone's investing 100 euros. Okay.
Of course.
So the benefit we have with tokenization, the proposition is owned by a company, a limited company, and the limited company is tokenized. So everyone would buy a share of the limited company that owns the underlying asset, and they get the full beneficial right and capital growth of that property.
This is such a clever and at the same time straightforward mechanism, and I like that it allows you to reduce the minimum investment basically by factor of 1,000 to 10,000x, from 100,000 or 1 million to just $100, and that indeed a great transformation in the market. It seems that one of the reasons you have decided to focus on Spanish property market is because you find it quite an attractive from an investment perspective, and that is why you want to unlock access not only for local investors but for international audience. Could you please tell me a bit about the Spanish market, and why do you believe it will be growing and it does make sense for investors to get on the training?
I personally own property in Spain for over 20 years. It is a fabulous country. It is deemed to be a very stable country. It is economically and politically stable, and I think that makes a huge difference. This year, Spain has been declared as the top economic country in the whole of Europe. So again, that is very good. The benefits economically for me are Spain is a little bit behind the rest of the world with regard to property ownership. So for example, in the UK, in America, in many other parts of the world, the banks support people or companies to be able to buy property for long-term rental, for example. In Spain, they don't. So they are behind the rest of the world with regard to the opportunities that long-term property rental has offered everybody. Okay. I think most people understand, whether it's themselves, their family members, their parents, that property has always made money long-term for people. In Spain, the banking system, which again is quite archaic, which led me into why I'm doing tokenization, aren't forthcoming lending people money to do commercial rental. Okay, I can buy a house for me to live in. That's not a problem. But as soon as I say to the bank, I want to buy a commercial property to rent out, they don't understand or enjoy that proposition. So it doesn't work very well. Okay, so that's a great opportunity in Spain. Murcia is, so we live in the southeast corner of Spain. It is very inexpensive in comparison to the rest of Spain. Okay, so I'm talking just about, I'm not talking about property prices. I'll talk about that in 2 seconds. I'm just talking about the cost of living in Murcia is lower than the rest of the country. Okay, Spain is very interesting in the fact of, if the bulk of the population live in major cities, Barcelona, Madrid, Malaga, Valencia, and there's very little else around the major conurbations. So it's very easy to look at comparisons for price. And the reality is Murcia, which is a city and a region, has a lower cost of living than a lot of other areas in Spain. The property prices in Murcia are typically 60% less than the average for the whole of Spain. Okay, so the cost of property overall is much lower. Okay, it's 1,379 euros a square meter compared to 2,270 euros a square meter. So it is a lower priced area. And the reason the prices are higher are, if you take Madrid, Barcelona, Malaga, those areas, they spike the prices across the whole of Spain because they are so expensive. And again, it's very important for us. Now then, for me as talking about investment, if you can buy property at the right price, there is a very good opportunity for you to make money on that property. But also, if you are renting it out, you're more likely to get positive yield on that property. Okay. Now then, a little bit of background for Spain. In 2008, we had the world economic banking collapse, and Spain suffered very badly with this. Okay, because they had lent a lot of money to constructors in the commercial real estate marketplace. So today we are able to purchase. Okay, so now we're in 2025. We're able to purchase properties from an entity set up by the Spanish banks to deal with all their toxic property. And these properties are massively behind the average price. So as I said, the average price for Murcia is 1,379 and Spain is over 2,200 euros a square meter. The property we are purchasing, including the full renovation, including the expansion work we're going to do on the property, will still come out at less than 1,000 euros a square meter. So the opportunity is enhanced where we are because we can buy property at such a good price. Okay. The problem we have is, and people keep asking me, why is this property available? And the answer is simple. I've already covered it. The banks will not lend anyone any money to do what we're doing. And I would hazard a guess that this property, if we didn't develop it, and the properties we're going to do in the future, they will still be here in 3 and 5 years' time. Because if the banks won't lend people money to promote and develop property, they will just continue sitting there, which is a crazy situation we have in Spain.
Less than 1,000 euros per square meter is just such a fantastic price. I've been shocked when you mentioned this. So what I'm hearing is that there are two mechanisms in play which you expect to deliver good return. One is the fact that properties are priced underpriced relative to the rental yield they generate, and therefore the rental return on investment is high. And second, to expect the property prices eventually to catch up to their intrinsic price, and therefore the actual value of the properties grow faster than the market average. Would it be a correct summary?
Absolutely. Absolutely. You covered it off. With regard to investment, there's two sides to look at. There's capital growth and income growth. So commercial real estate is the institutional lenders, the government borrowers, the people who do huge investments, trillions of dollars worldwide. They deal with commercial real estate. They don't buy holiday homes. Okay, they have to do things on a scalable level. Now then, following the COVID situation, commercial real estate across the world has actually declined dramatically because people don't need to work in an office. They work at home now. People don't need to go to the store to buy things because Amazon delivers it. So suddenly there's a massive change with regard to commercial real estate across the world. What these colossal funds are now doing is build to rent. So they are in all the major cities around the world. They are going to a developer, a promoter, and buying land and building a complete co-living development because they see this as being the future, not building a new shopping center, actually building blocks of apartments purely for long-term rent. And they are committing billions of dollars towards this goal. So what we are looking at is, with our development, we're talking about 40 apartments, 54 renting rooms, and then the conversion of an area into a co-living space with another 12 studios. So we are absolutely on par with where the institutional entities are going, which I think is very important. So going back to your point, if we have bought this and renovated it and built through the studios and we're still at €1,000 a square meter, if we, you're quite correct, over a next 3-year period, if we come up just to the average of the Murcia region, it would generate a 75% increase in value over a 3-year period, which is quite a uplift in value. In addition to that, we have a rental income. The rental income is going to be fairly stable, but because the properties are low, the yield is high. So we're going to be talking about a 12% gross yield, generating a 9.5 to 10% net yield. So if you add that over the next 3 years, we're well over 100% return on investment in that period.
And these are really good figures. Well, one thing I don't really understand is, why do you believe that the property will actually catch up with the market price and that the prices in Murcia will grow to the intrinsic value of this property? Like, if they are already underpriced by 60%, why this just won't persist for another 10 years? Is it because Spanish economy is finally growing and banks and investors are finally starting to wake up and put money inside the economy, or are there any other structural reasons?
We have no expectation of the prices of this development to ever get to the average price of Spain, 1,200. But there's no reason it can't rise up to the average price for Murcia, 1,379. And just to put this in perspective, we've looked at 5 years figures, okay? And the 5-year figure for Spain growth was 31%. So this is the average property price in Spain grew over the last 5 years, 31%. The average property price in Murcia actually grew 33%. So we are seeing Murcia closing that gap ever so slowly. In 2024, okay, Spain grew by 11.2%, but Murcia grew by 16.3%. So last year's growth, the value of property growth last year was 16.3%. So just looking at figures, I think the gap is closing slowly. So we're not going to say this is going to be the average price of Spain, but it could well be, and we expect it to be the average price for Murcia. The property itself is a really lovely property. When it was built, it was massively ahead of its time. It was very modern. Where it's situated, Alguazas, it's probably one of the nicest building in the whole of the town. It's a town of 10,000 people, and it's right in the middle of an industrial hub. So, you know, the long-term rental issue will be no problem at all. Plus, the co-living is something that doesn't happen in Spain, and one of our objectives is to build a co-living space into the building, which I think will enhance it dramatically. Because if you're living in a 40 or 50-year-old property at the moment, and there's one along the road which has just been refurbished with brand new air conditioning, brand new kitchens, and a co-living space, I think that's where people want to live.
Can you tell us a bit more about the actual property that you're tokenizing? So it sounds like the market locally is great. And what is this specific piece of real estate that you are bringing on chain? As I understand, it will be the backend for the API ALG token.
The property is, as I've just said, it was built in 2008, so it's already 15 or 16 years old. It was completed. It has remained unoccupied since that point. So it was repossessed by a bank. The bank put it into this company, Sareb, because it was deemed as toxic commercial real estate. And we are now in a position there, we can purchase that property, and obviously the property needs a little bit of work. There's some water damage on a couple of the apartments. There's some vandalism damage, things that happen over a 15-year period to a property. But the property is one of the nicest looking properties in the whole of the town. The position is phenomenal in the fact that it's right at the bottom of the town, near the road connections, near the motorway to get you straight into the city. You can be in Murcia city in 15 minutes. Okay. They're looking to build to expand the industrial and commercial areas around it. So it's very positive.
I was wondering to also understand a bit more about the IPI ALG token. So this token, as I understand, represents a share in the company that holds this property. And when you add future properties, it will be in the form of separate tokens. So it is primarily focused on this one development.
Okay. So we've used tokenization to promote this proposition, this property, with the IPI Alguaces token, and this is set up through a limited company, and the limited company will own and manage the rental of the 20 apartments, the 54 rentable rooms, plus the new commercial area. So the co-living area. So when the building was built, it was built very standard in Spain with a commercial area underneath that could be converted into shops and cafes. There's been a change in the law in Spain following COVID and continuing with the shortage of property in Spain for rental, that this commercial area can be converted into studios. So we'll be converting this area into studios. This will all be done within the limited company, within the token. So there's phase 1, phase 2. The first phase is just basically the renovation and the modernization of the 20 apartments. And phase 2 will be the conversion of into the co-living space and the studios.
Okay, understood. And what do you think is the exit strategy for investors? It seems like the big part of the return is the actual growth in the price of the token due to appreciation of the underlying asset. And I'm wondering, do you plan to sell the property later and distribute returns to investors, or do you plan to enable trading for the tokens and investors will just sell the tokens when they rise in value?
It's an interesting question. The benefit of tokenization, and this is so important, is the ability to sell your tokens on a secondary market. So we will be promoting a secondary market as soon as all the tokens are sold, so that clients can access their profit or gain. Some clients may well look just to hold the asset because not only has it made capital growth, but it will be making a long-term income growth as well. Mm-hmm. Which is very important to a lot of people. If you can get anything above 7 or 8% in property, it's deemed to be a high return. We know what the banks are doing, and we know what the banks have done long-term in income return. So this is a very good long-term hold. However, we understand this bit that, so the exit strategy will be the sale of tokens on a secondary market. However, we have got to be aware we could have a institutional buyer comes along at some point and just says, can we buy the whole proposition, the whole limited company off you? At which point we will go back to token holders and just go, this is what we have been offered. We wouldn't promote it if it wasn't a very good offer, but this is what we have been offered. What are your views? And if we have the majority of token holders voting to sell, we would sell at that point and return the income.
That makes total sense. I like that you have built-in flexibility, and that you also intend to ask shareholders their opinion, not just do what you believe is the best, but actually allow token holder input. And this is what I like about tokenization industry in general, that why this democratization, this isn't just about democratization of return of wealth that is being created by this opportunity, but also democratization of governance, of actually controlling and steering the economy, so that it is steered not just by like 10 people on the top, but by the broader community. So I definitely support and align with this ethos. Moving forward, I'm wondering to hear about what from your perspective, are the main risks of this investment? Because obviously, every good return is associated with some level of risk. However good the investment is, there is no investment that is totally safe.
Okay. So as I started, I've spent 25 years in financial services in the UK. Every day I talk to clients about risk, because before you talk about investment, you have to talk about risk. Okay. The risks of this property are different because it's obviously a larger scale proposition. But the principles of risk are very straightforward. Diversification. Okay. You shouldn't have all of your money in one place. So if a client puts all of their money into any investment, it suddenly lifts the risk of that investment. Saying that, where we are today, we have clients making colossal gains on cryptocurrency and being able to purchase things through blockchain technology. The reality is the risk of that proposition, I would say, would be a 10 out of 10, whereas the proposition we're putting forward would be a 2 out of 10 on the same scale. So it is not without risk. There is always risk, as you quite rightly say, in investment. But because of the long-term nature of it, because we are buying it massively behind value, because the long-term returns are very positive, the risk, I think, is well within what I would describe as a low-risk environment.
They probably bring the risk-return ratio of this investment into a very good place, because from what I'm hearing, the risk is still comparable to most standard real estate investments, while the return is significantly higher. And it seems that your audience of investors you're primarily targeting are crypto investors. And even if the risk was higher than the typical property investment risk, it would still be significantly lower than almost any other investment in the crypto industry in general.
So if we owned a single asset, let's just say a factory unit, and it was worth 3 million euros, and we rented it out, we get an income return. If the tenant leaves, we then have no income. Okay. Mm-hmm. So the tenant leaves, we have no income. And how long are we going to be without any income at all? And we all know that some commercial real estate industrial units can stay empty for months and years. The benefit of what we're talking about with regard to the diversification is we're going to have 32 rentable units. And the reality is, as long as we have high quality, affordable, well-maintained property, we expect the occupancy rate to remain very high and not reliant on one or two people being the sole tenants. So I think when you talk about risk of commercial real estate and you talk about a multiple occupancy property, I think the risk is lower.
Okay, I understand, because of the built-in diversification and the possibility for basically higher market for potential tenants, so that you don't depend on just a few large industrial buyers. That makes total sense to me. In the last part of our conversations, I would like to move to a broader bird's eye view topic and get your view on the future of tokenization industry in general. Where do you see this moving, and what does the next 5 years hold for us?
From getting involved in tokenization and the level of study I've done behind blockchains, tokenization, and all digital assets, I think the concern is with the old world. I think the principle of going to a bank to borrow money could be a thing of the past, because with the level of crypto assets and the growth of the younger people wanting to diversify how they invest, I think tokenization will be an absolute game changer. We're already seeing some of the larger companies in the world getting involved in tokenization already. So I think within 1 year, we will see some tremendous growth, and in 5 years, it will be the norm. We are just ahead of the game. I think we're at the beginning of the curve of the opportunity, and I think we're in a fantastic place.
I hope you're right, because that would be good for both of us. And on this note, I would like to thank you for being part of this conversation. I've been genuinely impressed by the business opportunity that you're presenting. And I really hope that you will be able successfully raising capital through it. And I thank you to all of the viewers who have joined. I hope you have learned a lot. Please like this video to help it spread. Check out the Neil's property possibility and see whether it's a good fit for you, and subscribe to this YouTube channel to see other great opportunities and interviews that we would be holding.